Hello, I'm Robert Teeter, Chief Strategist here at Silvercrest Asset Management. Thrilled today to be joined by Rehan Chaudhri, one of the portfolio managers running a global equity strategy here at Silvercrest. And I first want to start maybe with an important question that's on everyone's minds, thinking about tariffs in the context of global growth. And so one of the things I think that we saw in the U.S. was leading into this year, growth was slowing perhaps a bit, maybe cooling down to a level around 2% or somewhere in that level. And now we have this giant disruption in the form of tariffs, which most likely will be pulling growth down and pushing inflation up a bit. And I wanted to get your take on how that's playing out throughout the rest of the world as you think about impact on growth and inflation all around the world.
Well, the tariffs as they are at the moment will likely be more recessionary or more on the downside for global growth. On inflation, it's hard to say. As inflation rises in the U.S., it could be inflationary elsewhere, or possibly could be disinflationary, as the goods are more abundant outside the U.S. and it could actually go on the downside.
Yeah, that's one of the exciting things, I think, from your perch of thinking globally. These effects can be moving in different directions in different parts of the world. And I know some of the things that you've been focused on are trying to understand flow of different types of goods and materials and commodities and things as we enter this period. So are there regions that look particularly interesting as we enter this backdrop of likely slowing growth and likely some upward pressure inflation-wise?
Yeah, no, it's a very important question, a complex one, and if we kind of step back and say, well, the end superpoles, China and the United States, which have amongst a huge impact on global trade, there are regions in the world that both the two superpoles do need, and that would be Latin America as well as the ASEAN region. So Latin America produces large amounts of commodities, base metals, energy, foodstuffs that are in demand by both nations. In the ASEAN region, similarly, very high growth, young population. So in fact, yes, the two superpoles may be negatively affected by the tariffs, and I would say globally it would be a negative effect, but there could be beneficiaries as well.
Yeah, that's exciting. That's one of the really interesting things about what you do and how you approach it. Maybe shifting gears a little bit, we could certainly talk about tariffs all day, but one of the other themes that we've been focused on here is really the spread of AI. And one way I've been thinking of it is you sort of had the first wave of interest in the chip companies that are feeding the AI revolution. Then you have some of the bigger companies building out and a lot of CapEx spending. And I'm starting to see some more spread of AI implementation, certainly at least in the U.S. And I'm wondering how you're seeing things globally. Where are other countries and regions in their adoption, and where are they on the AI curve?
And it's an important question, and so in terms of AI patents, the two largest nations are the United States and China. However, use of AI and deployment seems to be a global phenomena. I think it be a significant enhancer to productivity. So despite the fact that near-term growth around the world is regressing, the AI revolution will be productive. But there's many ways to look at AI. One is the chip side, the services side, but it's also then the energy side.
Right.
So AI will demand quite significant amounts of energy. A lot of it might be more sustainable or renewable in nature. So investments in the grid or investment in electrification and eventually in commodities like copper could be a way that one can play on AI and the boom.
Yeah, that's a really exciting theme, and I know it's one you've spent a lot of time on in thinking about the evolution of that space. And is it your sense that some of the disruption that we've seen at the beginning of the year with volatility and markets and things, is that slowing down or extending that cycle of some of those build-outs, or are people seeming to put things on pause or holding back a bit, or is it an unstoppable force?
Even if it's a bit of a pause, I think the force on the upside is very, very strong. Uncertainty of policy always puts a damper on both business capex and consumption by the consumer. So once that uncertainty starts to alleviate itself over the year, I think things will go back to the norm. Over the long term, I think, yes, tariffs are an issue, but I believe what the United States is attempting to do is trade normalization. And what we'll see with some of the deals that will be announced, probably with the EU, possibly with China, Japan, large trading partners, is a higher consumption of U.S. energy, U.S. agricultural products, U.S. technology, financial services. So as these start to normalize, I think one could actually see a reacceleration of the economy in the back end.
Really exciting. So just maybe taking another sort of big picture view, one of the classic textbook things that lots of people look to is rates of growth in economies around the world. And as the U.S. Demographic picture has slowed a bit, and underlying assumptions around growth have slowed, lots of investors and clients think it's wise and exciting and interesting to look overseas. And so I wanted to get your take on sort of growth outlook globally, but where are some regions that are likely to see above average rates of growth in the next 3 years or 5 years?
Yeah, no, you're hitting on a very important point. 2020 was a very important year in human history. That's when there were more 65-year-olds than under 5-year-olds. So we reached the peak youth period of humanity. So the aging population is a global phenomenon. However, some parts of the world are growing rapidly. ASEAN region, as mentioned, South Asia, Africa, Latin America. And what's interesting is that at least some of these markets are quite cheap.
Right.
Yeah, so the ASEAN region, Latin America, or high single-digit PEs or low double-digit PEs. India, of course, is a bit higher multiple market, but shares the same demographic growth as ASEAN and Latin America and Africa.
Yeah, it seems like there's a great opportunity set out there, and perhaps some of this disruption is a catalyst to finally getting allocators and others to start looking a bit more globally and how they allocate. We've certainly seen some changes in flows and things like that as the year has progressed this year. I wanted to maybe talk a little bit about sort of how you think about portfolio construction and that intersection of the bottom-up side of what you're seeing from companies, but also top-down and how you're thinking across regions and countries when you size positions and look thematically across your portfolio.
Well, in terms of our portfolio construction, it is bottom-up. And when we were coming into this year, the non-U.S. markets did look undervalued. Now, there has been some shift upwards in those markets, but the U.S. has seen a pretty strong downdraft, and there are certain parts of the U.S. market that are demonstrating value. So anything related to home building or the housing market has come down significantly. Consumer stocks that import goods have been hit quite hard. Semiconductor capital equipment is down almost 50% over the past 9 months. So the pockets of value, some are, yes, abroad, remain, especially emerging markets, which look very, very cheap. However, I wouldn't discount the fact that as a value manager, we're not seeing value in the United States now.
Right. Interesting. So I think maybe another issue that would be worthwhile to explore, particularly because people are, I think, very well aware of the theme in the U.S. where larger companies have been in favor for quite some time, and I think there's been some of that has played out outside the U.S., but wanted to get your take on sort of bigger versus smaller companies outside the U.S.
Well, the concentration of large cap has been relatively extreme, and so perhaps it's due for more mid-cap names, and what used to be large cap is now mid caps. So there's opportunity to cross the cap spectrum, but then again, we have more exposure towards certain large cap names in the emerging markets that have underperformed significantly, where we see upside, and so across the board, one can see value in different cap structures, but the mega cap have done extraordinarily well.
Right. Yeah, it certainly seems like a lot of opportunities sort of poised to happen once you get a little bit of the flows and get a little momentum going. It seems like it could attract a lot of attention. Exciting spaces.
Yeah, no, it's an exciting time to invest. I know there's a lot of volatility, but the volatility creates the opportunity.
Yes. Yeah, absolutely. Couldn't agree more. And that's maybe a good spot to end.
Yeah, thank you.
Thanks.